10 blue chip stocks every investor should have. Here's a fun fact. The name blue chip came about from the game of poker in which the blue chips have the highest value. Unlike other stocks, blue chip stocks are considered the crème de la crème of all stocks. Not only are they relatively safe and established, they are also dividend payers. Moreover, they demonstrate longevity and financial stability within companies, growth potential, and a strong track record. What makes them attractive to most investors is their history of consistently paying dividends and their ability to remain profitable even during recessions. Whether you are a beginner investor or an experienced investor, blue chip stocks are sure to be your favorite, for they are seen as less volatile investments than owning shares in companies without the blue chip status. These stocks are known to be very liquid since they are frequently traded in the market by individuals and companies. Therefore, anyone currently trading or in need of immediate cash can peacefully submit a sell order for his or her stocks, knowing that there's always an entity looking to buy whether the economy is good or bad. Most blue chip companies share the following similarities: little to no debt, large market capitalization, a stable debt to equity ratio, a high return on equity, and a great return on assets. Furthermore, the combination of a strong balance sheet and a high liquidity have earned them great bond ratings. Any investor can generally track the performance of shares of the well-known and financially stable publicly traded companies through blue chip indexes, which at times acts as a proof of industry performance. Most publicly traded blue chip stocks are included in the Dow Jones Industrial Average, aka DJIA, which is one of the most popular blue chip indices. Though changes made to the DJIA index are almost non-existent, if not all, most investors should frequently check on the DJIA to stay up to date with any changes that may occur. Dear future moguls, entrepreneurs, and businessmen and women, here are 10 blue chip stocks you should have in your portfolio. Number 1. Apple, AAPL. Apple stock is traded on the Nasdaq Global Select Market under the ticker number AAPL. Its initial public offering was on December 12, 1980 at $22 per share. The stock has split 4 times since the company went public. The stock split on a 7-for-1 basis on June 9, 2014, and split on a 2-for-1 basis on February 28, 2005, June 21, 2000, and June 16, 1987. Though Apple pay cash dividends, it doesn't have a dividend reinvestment program. Therefore, it's best to trade it under a brokerage account. As a titan in the business world, it is known to have an extensive return of capital. Apple stock can't be purchased directly from Apple. However, it can be purchased through just about any brokerage firm, including online brokerage services. At the time of this recording, an Apple stock sells for $300 $10.13. Number 2, Amazon, AMZ. In 1997, when Amazon first filed for its initial public offering, the company was just 3 years old and had no clear path to profitability. It faced a growing list of competitors that included Simon & Schuster and Barnes & Nobles, each of which was already selling books online. When it comes to Amazon stock split history, the first stock split occurred on the 2nd of June 1998. This was a 2-to-1 split. Amazon's next stock split was a 3-to-1 split on January 5th, 1999. There was one more stock split for Amazon stock that year as a 2-to-1 stock split on September the 2nd. Amazon IPO'd on May 15th, 1997, trading on the Nasdaq under the symbol of AMZN at a price of $18 a share. On IPO day, the stock price rose and closed at $23.50, putting the company at a value of $560 million. Taking the split adjusted close of $1.96, the stock price has multiplied almost 500 times since. At the time of this recording, an Apple stock trades for $2,379.61. Number 3, PepsiCo, PEP. PepsiCo stock is traded on the Nasdaq Global Select Market under the ticker symbol PEP. PepsiCo Inc. engages in the manufacture, marketing, distribution, and sale of beverages, food, and snacks. It is a food and beverage company with a complementary portfolio of brands including Frito-Lay, Gatorade, Pepsi Cola, Quaker, and Tropicana. PepsiCo has had 4 splits. The first split for PEP took place on May 31st, 1977. This was a 3-for-1 split, meaning for each share of PEP owned pre-split, the shareholder now owned 3 shares. Long-term PepsiCo shareholders have seen the investment far exceed the return of the broader stock market. The stock is up nearly 7,000% since the early 1970s, compared to a 1,900% return for the S&P 500. At the time of this recording, a PepsiCo stock sells for about $133.52. Exxon Mobil, XOM. Exxon Mobil Corp engages in the exploration, development, and distribution of oil, gas, and petroleum products. It operates through the following segments: upstream, downstream, and chemical. Exxon Mobil has had 5 splits in our Exxon Mobil stock split history database. The first split for Exxon took place on July 26, 1976. This was a 2-for-1 split, meaning for each share of Exxon owned pre-split, the shareholder now owned 2 shares. For example, a 1,000 share position pre-split became a 2,000 share position following the split. Exxon's second split stock took place on June 12, 1981. This was a 2-for-1 split, meaning for each share of Exxon owned pre-split, the shareholder now owned 2 shares. At the time of this recording, an Exxon Mobil stock goes for $46.18. Number 5, Berkshire Hathaway, BRK.B or BRK.A. Berkshire Hathaway stock is traded on the Nasdaq Global Select Market under the ticker symbol BRK.B/BRK.A, BRK.A. Yep. The company is known for its control and leadership by its chairman and chief executive, Warren Buffett. In the early part of his career at Berkshire, Buffett focused on long-term investments in publicly traded companies, but more recently he has more frequently bought whole companies. Berkshire now owns a diverse range of businesses, including confectionery, retail, railroads, home furnishings, encyclopedias, manufacturers of vacuum cleaners, jewelry sales, manufacture and distribution of uniforms, and also several regional electric and gas utilities companies. Berkshire Hathaway Inc. New, which is like the BRK.B, has one split in our Berkshire Hathaway Inc. New stock split history database. The split for the BRK.B took place on January 21st, 2010. This was a 50-for-1 split, meaning for each share of BRK.B owned pre-split, the shareholder now owned 50 shares. At the time of this recording, a Berkshire Hathaway stock trades for $265,000 and $280. Six, Visa. V. Visa is an American multinational financial services corporation headquartered in Foster City, California, United States. It facilitates electronic funds transfers throughout the world, most commonly through Visa-branded credit cards, debit cards, and prepaid cards. Visa's NYSE:V stock performance has been nothing short of extraordinary. In its very first day of trading, shares jumped 28% over their IPO price, kicking off a seemingly endless rally that continued for years. Visa has had two splits in history so far. The first one took place on December 11th, 2000. This was a 1-for-5 reverse split, meaning for each 5 shares of Visa on pre-split, the shareholder now owned 1 share. The second Visa split took place on March 19th, 2015. This was a 4-for-1 split, meaning for each share of Visa on pre-split, the shareholder now owned 4 shares. At the time of this recording, a Visa stock sells for $185.09. Number 7. Facebook. FB. Facebook stock is traded on the Nasdaq Global Select Market under the ticker symbol FB. The company engages in the development of social media applications for people to connect through mobile devices, personal computers, and other surfaces. It enables users to share opinions, ideas, photos, videos, and other activities online. It was founded by Mark Zuckerberg along with fellow Harvard College students and roommates Eduardo Severin, Andrew McCollum, Dustin Moskovitz, and Chris Hughes. Facebook offers other products and services beyond its social networking platform, including Facebook Messenger, Facebook Watch, and Facebook Portal. It also has acquired Instagram, WhatsApp, and Oculus, and has a 9.9% stake in JIO platforms. So far, Facebook hasn't had any stock split. At the time of this recording, a Facebook stock goes for $212.35. Disney. DIS. Disney stock has been publicly traded since 1957, when it had its initial public offering, where Disney stock was sold for $13.88 per share. Previously, the Walt Disney Company or Corporation issued its first stock through 6% cumulative preferred shares in 1940. where it was traded OTC or over the counter. Disney stock has been a part of 6 stock splits since the IPO. The first post-IPO stock split happened in 1967, which was a 2-for-1 stock split. There were 2 more 2-for-1 stock splits shortly after in 1977 and 1973. The next stock split happened over a decade later in March 1986, when a 4-for-1 split took place. The 90s brought 2 more stock splits, one 4-for-1 in 1992 and then a 3-for-1 stock split in the summer of 1998. All these stock splits work out as 1 share purchase at IPO being the worth of 384 shares today. At the time of this recording, a Disney stock sells for $109.16. Number 9. Johnson & Johnson, J&J. Johnson & Johnson is traded on the NYSE Global Select Market under the ticker symbol J&J. Johnson & Johnson is an American multinational corporation founded in 1886 that develops medical devices, pharmaceutical, and consumer packaged goods. Its common stock is a component of the Dow Jones Industrial Average. Johnson & Johnson had worldwide sales of $70.1 billion during the calendar year of 2015. Johnson & Johnson's brand include numerous household names of medications and first aid supplies. Among its well-known consumer products are the Band-Aid brand, line of bandages, Tylenol medications, Johnson's baby products, Neutrogena skin and beauty products, Clean and Clear facial wash, and AccuView contact lenses. Johnson & Johnson has had 6 splits so far. The first split for Johnson & Johnson took place on May 18, 1970. This was a 3-for-1 split, meaning for each share of Johnson & Johnson owned pre-split, the shareholder now owned 3 shares. For example, a 1,000 share positions pre-split became a 3,000 share position following the split. At the time of this recording, a Johnson & Johnson stock trades for $148.70. Number 10. JP Morgan Chase, JPM. JP Morgan Chase & Co. is an American multinational investment bank and financial services holding company headquartered in New York City. JP Morgan Chase is ranked by the S&P Global as the largest bank in the United States and the 6th largest bank in the world by total assets. With a total assets of $2.687 trillion, it is also the world's most valuable bank by market capitalization. JP Morgan Chase is incorporated in Delaware so far. JP Morgan Chase has had 3 stock splits. The first split for JP Morgan Chase took place on April 24th, 1973. This was a 2-for-1 split, meaning for each share of JP Morgan Chase owned pre-split, the shareholder now owned 2 shares. JP Morgan Chase's second split took place on January 16, 1985. This was a 2-for-1 split, meaning for each share of JPM owned pre-split, the shareholder now owned 2 shares. JPM's third split took place on January 16, 1987. This was a 2-for-1 split, meaning for each share of JPM owned pre-split, the shareholder now owned 2 shares. At the time of this recording, a JPM's stock trades for $92.70. In conclusion, whether you are a beginner investor or an experienced investor, blue chip stocks are sure to be your favorite, for they are already seen as less volatile investments in liquid assets, since they are frequently traded in the market by individuals and companies. Unlike other stocks, blue chip stocks are considered the crème de la crème of all stocks. Not only are they relatively safe and established, they are also dividend payers. Moreover, they demonstrate longevity and financial stability within companies, growth potential, and a strong track record. The end. Thank you.